Welcome back to this week's weekly analysis. It's your boy, Mighty Fine. Got everything prepped this week. Should be a relatively easy walk through. If you were watching any of these major pairs last week, you saw a big old reversal. So what I'm sort of expecting, and to be fair, it's a bit conflicting with the macroeconomic situation. However, from a longer, higher time frame technical perspective, I think this makes sense. I think we're going to see some short-term bearish pressure on the dollar. Short-term is a bit ambiguous, and I can't exactly predict how long that's going to go on for. But from, a technical perspective on the weekly or even the monthly charts, we need some sort of retracement relative to this massive bullish push. And when we look at the daily chart, we can see that we entered this sort of secondary phase of transitional pressure here, and now we're starting to exit out of the bottom of it. So we saw a nice sort of break of structure, break of flow here on the daily chart. Then we see a couple of expansion, instances here. And then, we had this big voluminous Friday finish downwards, nice closure below the previous lows of this transitional phase. And now we're just kind of butting up into some sticky little areas of liquidity. So heading into this week, really, really simple. And hopefully we get a nice, clean week. In terms of news and data events and such, it's relatively calm. We have Powell talking a couple of times. We have some UK GDP. We have a few, medium to low stacks from the yen, as well as a Michigan consumer sentiment from the US. For important things that I'll be watching all week, go ahead and check out that Discord. In the free section, I share what major events I'm looking at this week, as well as what happened last week, if you're interested. But relatively, I think we should have, hopefully a smooth and efficient price action behavioral week. So if that's the case, what we're looking for here is continued downside pressure on the dollar. Here's a little tip, free nugget for you. Go to the US 10-year, okay? US 10-year helps a lot when it comes to understanding where current dollar strength is or is heading. As of right now, we have a break of structure on the 10-year. We're seeing price drop back below 4.5 after reaching this 5% region where it was astronomically high. As price pushed up, the dollar went on a run. As price pushed down, the dollar has fallen. It's a direct correlation right now. So this is going to be very indicative of what's happening with the dollar as we head into this week. And if you pay attention to this, here's a little note for you if you want to pause the video, take a quick read. But that's something that I'll be currently watching. Very interesting level after we got this break of structure in the high time frames. Anyways, back to the dollar. So current flow is what we're looking at here, from the top of this wick to the bottom of this wick. Here's some key levels that I'll be watching. I would not look to take any long dollar positions above this area. I would just wait it out. As of right now, I have an overall bearish bias on the daily and the H4. So my intra-week bias is down, which means that my bias for EU, GU, and AU are all up, as well as Nasdaq if it plays nicely. Gold continues to push upwards, and it's kind of just doing its own thing on potential geopolitical tensions. But with that being said, just looking at the dollar right now, I'm looking for a retracement back into this H4 supply that I have marked out here. That's sitting at about 106.298. That represents the last area where sellers stepped in and extended this trend to the downside. Now we have a couple of sticky areas, as you can see here, in the mid to low 104s before we get down into the major weekly zone around 103.600 to about 103, 102.90. Interesting spots. I would certainly make note of these. These are just based on previous liquidities over here. And as price moves down into those, you may see, order flow sort of bounce around or create pullbacks. However, I'm hoping that price will stay below this 106.298 level, the H4 major supply. If we can get a pullback relative to either this broken demand, potentially turned supply, sorry, that's really crooked, or a pullback relative to this major supply, something like this, highlighted here, then I'm looking for a breaker bounce scenario, heavily preferring the downside. If price gets above that H4 supply, like I said, I would personally just wait and see if we're going to get that deeper retracement relative to the daily supply, or if this is just going to be a shitty range. Hopefully that's not the case. Hopefully this week we get continued smooth flow with high volume cascading downwards. That's going to allow us to take long positions on whatever our dollar back pairs are. So very similar situation, and this is where the video is going to get pretty dang quick. Pullbacks into H4 demand or daily demand on EU, GU, and AU. Now, EU is looking quite clean, to be totally fair. Target zones would be roughly 108,500. You have a few little liquidity pockets that you may want to pay attention to along the way, most notably one near 107,880. However, just looking for a pullback, some sort of intraday transition, be it the M30 or the H1, break a flow, break retest, upside, and then you take the breakout upwards. Very, very simple entry procedure based on intraday market flow. Same deal goes for GU here. Very voluminous finish to the week as we pushed past these major levels, had a high time frame break of flow, and then a nice expansion, big closure upwards. Looking for a retracement relative to that H4, hopefully not the daily demand, maybe just the H4, we'll see. Now, with GU, one way that I've noticed it behaves is sometimes we get a shallow pullback and a reaccumulation. So as you go into the smaller time frames, I would dig into this area right here because generally it becomes a little bit interesting. We'll see where it goes. If price gets below the last wick of the H4 candle here, then I would anticipate a pullback into the true H4 demand. Transition down here, push back up, could be a potentially very juicy little run. So again, fingers crossed that we get a nice continuation week here with a good pullback, smooth transition, push upwards. Now, you know, that's all good, fine, and dandy. We may not, so I will be watching this level as well. I find GU extremely interesting this week. AU, a little bit less so. As we get up into the daily chart, it's pretty damn choppy. However, same situation. Late break of flow on the daily chart here. We've broken out of our weekly major supply zones here. Tons of selling liquidity has been pushed out, but we didn't get a really strong closure above that, and we have lots of selling pressure up here as well at around 65,223. So if we get a pullback back into this, I just want to be careful that we can create a new high. If we get something like this, I want to make sure that this next attempt to the upside is able to break upwards. If it doesn't, then I'm going to want to pull some of that out. And that's just that. However, pull back into here, same idea. Looking for those extensions upwards, and if we get that, then we'll start to pay attention to these liquidity levels on the way up, all these major injections of cash. And that's pretty much it for the major currency pairs. Now I want to take a look at Nasdaq Nasdaq 100, the Nasdaq index. Before I get into that, if you're interested in learning more about this stuff, check out my Discord. There's a bunch of free resources in there. I do everything from technical to fundamentals. You can even join as a member, even if you're not in my course. You get access to live trading sessions, much more in-depth analysis, after action reports on every session, recorded sessions, so on and so forth. More info is on my website. But anyways, before we get into that, let's check out Nasdaq. So primarily, I want to just take a peek at the daily here. As you can see, we are still trading relative to sort of this big weekly leg here, but we broke past this major daily high time frame supply here. That is fucking important, guys, because as the dollar moves down, as yields go down, we're going to see more money move into this market. This is technically a high risk asset. However, I think that speculators are considering that the US economy is quite resilient. We are seeing some softening in the labor market. Both of those were goals of the Fed. People are believing that inflation is currently being combated with the monetary policy measures that the US Fed has taken into action. So this thing, short term, is macro supported bullish. Now, if that's the case, this is a great situation because in this scenario, Nasdaq can crank. And if we get a pullback back into even H4 demand here, or back into this level, 14,719, or back into 14,3 whatever for a deeper pullback, all these are very attractive. Every single morning from pre-market to NYSE, in that certain operation window, I will be watching Nasdaq because I love Nasdaq long positions. They're great. When they explode, they make a ton of gains. So watch these as key levels: H4 demand, this little pocket that broke out of this high time frame major supply, as well as the area of secondary phase transition down here, representing the pivot that broke that major supply. Okay, pretty simple. If you don't understand what an intraday transition looks like, or if you want to learn more about price action, like I said, I have tons of free resources from this YouTube to my Discord, or even through my paid course if you want to go that route, feel free to shoot me a message or drop a comment below. And please, please, please give this video a thumbs up. It helps me get more spread and influence and reach to other people who need help too. It helps suggest my video to new and aspiring traders, which helps all of us. So on that note, trade smart, trade safe, have a great week, and I will see you next week. Mighty fine.